Alrighty. TGIF almost. It's Thursday. Second to the last day of the week. Looking forward to it, as usual. And this is Doc from North America. Good morning, good afternoon, and good evening. Hey, Robin. Hey, George. Good morning to both of you, and possibly good evening and good afternoon to others. It's 8:31 in the U.S. of A. on the East Coast, and it is like 10:31 in Tokyo. So it's definitely in the evening, PM. So that shows you just where we're at and what we're dealing with. Communicating with people going in different directions. I saw all the the markets, how they closed over in the Pacific and the Asian region, all the way to Mumbai and so forth. And it's interesting. And then you see the day is rolling along. You have probably Dubai closing down at this point, and Tel Aviv, and then you kind of move on to Egypt, and then next thing you know, we're heading towards past lunchtime, and in Europa, Milan and Frankfurt. So just saying hi to everybody. It's nice to do, and I don't have any complaints at the moment. We got that strength in the afternoon yesterday we talked about in the gold, which was nice. We saw that the South African rand was really trying to tell us that it wanted to lift up, and by the end of the day, it didn't get plus, and it didn't get into a buy, but it lifted up. The same thing now in the stock market, which was interesting. They started rallying the market in the beginning of the Fed conversation. I guess you could call it that, the Fed conversation. And then they sold it down. And as you can see right now, let's see, what do we have up there? I think we have Bitcoin up there at the moment. We fixed that Bitcoin situation. It went into the sell there yesterday. It's flirting with that weekly buy. But let's get over to the dollar index. That's what you have up on. What do we have on the euro? Oh, J4X. We don't have that. I was looking at that bond. But let's get the dollar index up right there. You can see the dollar index has been moving down. Interest rates are, pressing in all kinds of directions here in the States. It looks like they're going to raise a couple more quarter point raises. That's the way it looks at the moment. Mr. Powell was really, I would say that he basically hit his thumb with a hammer. That's what the way I see it. Let me get the dollar index up on the screen there. There it is, right there. You see, same situation with, Chicago Quant. It's moving down, 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 just like we have over here. And J4X moving down, down, down. They're both moving down, down, down. And, it's the weekly is holding up. It's still in the buy, which is a surprise, but that is the dollar index. It's battling to try to hold this ground in here. I think it wants to, I keep on saying every time it gets up towards the 4s and the 5s, I expect to see it in the 90s. Expect to see it every time we go into a sell and we get into a weekly sell. And when we get in that weekly sell, that could be the real beginning of a drop. So, but, we have those odd situations where, they treat it, hey, Robin, they treat it like, flight to safety. At the same time, we are making the noise, Unfortunately, ever since 2008, pretty much everybody else is out of business, and they just kind of float along, and the dollar is king dollar. It's not. There's no way of stopping that king dollar because there's no other country out there. I know they talk about putting BRICS together and so forth, which would be really cool, if they could do something like that, but they'd have to incorporate like the euro, and they'd probably have to incorporate, say, because having the second largest economy in the world would help to make the BRICS more stable, and so forth and so on. And now they're trying to get some of the G nations in it. They're talking to Australia and New Zealand, and I guess the biggest of them all right now is the South African rand. These things hold and help the Russian ruble and the Chinese yuan. They're not very good products. There's not much liquidity to them. They don't really have a large percentage of action in the marketplace. That's the problem. And Brazil, then they brought in Brazil, and that makes it even worse. I guess you could say, or they're equal. Brazil's equal with China. The currency is very hard to trade, and In other words, there's just no currency to trade. It makes the Turkish lira look like the euro. It's strange. Anyway, that's what would sway the world, is if the BRICS would actually pick up something like the second largest economy, like the European Union. And for those who actually want to walk around thinking that China is the second largest economy, good luck with that. You can always try to make a case if you want on the chat line, and I'll gladly listen. But so far, something that only trades 2.5% a day is not a dominant currency, and it's fixed and it doesn't float and things like that. And that's why we say this stuff. We see the euro as the second largest economy with 21 trillion, with a currency that floats. So we actually trust that it's 21 trillion. Whereas and when a country doesn't have a currency that's floating, it's awful hard to really measure what their GDP is, and their real CPI becomes a little confusing, and in other words, you can't compare them. That's the problem. And if I can't compare them, then they're not really real. They're just some type of fixed product with an exchange mechanism. It's unfortunately, we don't get a lot of people talking facts when they go after these things. They just throw it out there. But anyway, I'm not trying to beat up a currency. I'm trying to understand a currency. That's where I'm at, because we're trying to make money here. We're not trying to just trade the trade. And that's where my head is always at. Trade to make money, not trade to trade. All right, so you can see the dollar index moving down, which is, as far as I'm concerned, it's supposed to do. The dollar is way overvalued. All right, let's go take a look at the euro. See what the euro is up to. Here we go. Right there. There's the second largest economy, the euro. And it's pushing up, up, and up. And we'll put it up over on Chicago Quant, our chart, with our algorithms. And that's not it. There it is. Right there. You see that same thing? It's got some nice strength to it. And that's not a mechanism where they're fixing it. No doubt, I am very quick to say, yeah, these central banks, they influence their currencies and they influence this and that and so forth. But one thing is for sure, it does float in an open market. And as much as we know the central banks are on our shoulders, holding the gold down, doing all of those things to try to keep what they refer to as stability, this thing is floating up, and it's doing exactly what we keep on thinking it wants to do. And that has become, a higher price. We've just seen all-time lows 4 months ago, which was incredible. Or 5 months ago now, I guess it is. So, it's that's kind of neat stuff to see. For decades, for years around here, people would say, Doc, when is the thing going to break the par? When is it going to break 100? That one line right there. And there it did it. We were in that weekly sell. The math picked it up. We were in a daily sell as it went down to it. The whole bit. It did it. And now, since it's done it, it's been only finding a way. We went into a weekly buy here, and it just ran up, 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 and away. And so I guess that got it out of the system. People in their heads and their minds and their hearts wanted to see that euro break the 100. 1.000, and it did it. And then what is it doing now? It's moving up, in a nice direction, slow and steadily. And that makes a lot of sense, because there's a lot of desperation to try to get away from the dollar at times. And this is one of the only tools on the planet that you can, besides gold. So now, from there, we drift over to, why don't we look at gold for a second? Just a quick look. I haven't seen it since we sent the charts out this morning. Let's go look at it real quick, just to get a flavor of it all. Let's see, where's it at? Right there. Okay. And there. And right there. Yeah, they popped it up yesterday. Towards the end of the day, that's what we were expecting to see happen. And now it's kind of stalled. Got a little green dot in red there. That's kind of interesting. I'd like to see this thing try to turn up more. It's in that weekly buy now for a second full week and a third week when it comes to the fast. So that is the other product I guess you can run to when you're not running. Unfortunately, you run to it, and at times, I myself think that gold should be $5,000 an ounce. already. All right, but if you had said to me in 2007, describing what 2009 looked like, I would say, oh yeah, gold's 5 to 10,000 an ounce, but it never even got close. Central banks have done a good job of holding it down. And then when you go look at the futures contracts further out, year after year, they're up like $100 a piece. They, right now it's like $2,300 an ounce in the futures contracts where they can't exercise it. And that's the key to floating currencies. When you have a floating currency, in essence, you're able to exercise it. And that's a real important thing. When you can exercise something, it's really hard to hide the true value. And when you can't exercise it, it's really easy to hide its fair value. That's the problem. All right, back to the currencies. Let's go to the cable. Let's see what Mr. and Mrs. Cable are doing this morning. Right there. You see the cable's doing the same thing. It tried to get into the sell yesterday and didn't do too good a job. In fact, that line is back a day there, right there. So it went into the buy there. It's giving us that red and green also. And it's underneath the zero line, so it's putting that pressure on as we speak, as you can see it right now. Now we go over to J4X, and we'll put up cable there, right there. And you can see all that strength on the daily. We are at the high end of the range. You can see the fast stochastic is breaking the slow stochastic. So there's some daily pressure going on. And you're going to see when we turn off the Hinky-Ashke bar, you can see, well, it's still up. It's still holding up just like it is here. Only thing is our math is trying to turn underneath already, just like the fast-moving stochastic is. Let's see, what do we got here? There's Metho, and JA, and AK. Hey. And Tanner, I like that one. There we go, Tanner. TA, hello. And Frank, hey, how you doing? It's nice, everybody saying hi this morning. That's so cool. I guess you're all like fed up with the Federal Reserve of the U.S. like I am, with the things he said, the way they treated the whole situation. You can see the market just like over the hour that he spoke, the Dow went from like up 200 points down 500 points. Everybody was shaking their head like, what's wrong with this guy? Doesn't he understand the frustration and the pure inaccurate data we get from you, and that you don't even accept it? Like one person asked the Fed chairman, "What about fiscal policy by the government?" He said, "Oh, we don't pay attention to that." Oh God, they just spent $5 trillion over the last 2 years extra in debt, and he doesn't pay attention to that. Well, maybe it's time he started paying attention to it. I think that's what the market kind of tried to remind him yesterday when they sold down. It's like, maybe you should pay attention to that. Even Bernanke and Greenspan would say things about it. They would talk about you need to be more fiscal responsible and you need to be less overspending. Right now, for every dollar, this year we are at record. See, I guess last year's income tax, when they tax us on April 15th, record income tax. In other words, we've never collected more income tax in history. But at the same time, these guys and gals there in Washington spend more than they bring in. So they bring in $1, or they take in $1 from the taxes, and then they go spend another 29 cents. So $1.29. It's like you got to stop that. That's part of the inflation. And then we're passing that inflation around the world. And people are tired of that inflation. Frank says, one question. Did Dukascopy provide real volume for DAX, NAS, and Euro? Yeah, it's on there. I just don't follow it. We used to keep it on there, and it was so sad. After 2008 and the crash of the world economy, I know that sounds a little funny because not many people say it that way. That's the way I see it. Obviously, when Lloyd's in London now is owned by the Exchequer and Merrill Lynch is owned by Bank of America, and Deutsche Bank is owned by the Federal Republic of Germany, and they pretend in name that they exist, but they're just slowly trying to unwind them still. Or Citibank in the United States is basically owned by the Federal Reserve. And then when you look at their stock prices, everything I've said, is pure 100% proof. In 2008, Citibank fell to $2.50 a share. Right now, trades around $4.50 a share, and its all-time high back then was 60 some odd dollars. They did some fancy 10-for-1 reverse splits to make it look more expensive and valuable. So in other words, for every 10 shares you had, now you only have one. And instead of it being $2 a share, it is $20 a share. And oh boy, it went up in value, but no, it did not. And so now it's trading in the 40s, and that means it's only at $4. And then you have to take the all-time high. Instead of it being $67, it's $667. And it's the same thing for Deutsche Bank and Lloyd's of London. Can you imagine? We thought Lloyd's of London was the Rock of Gibraltar. In other words, it would never sink. It's there forever. Gone. Crushed. And so, we used to have the volume on there. This all comes down to the volume. But you could see that we lost 70% of our volume. And that's when high-speed intraday trading began. So that they could try to lift up the volume and try to make it look like, oh, no, there's no problems. Yeah. See, Citibank is a $40 or $50 share of stock now. And, the volume, it's fine, that type of thing. So that's why that's why I don't reflect volume. Oh, that's no problem. I love answering questions. Remember, there are no wrong or dumb questions in trading and money. There's only a long answer or a short answer. And that's how it all works. So that's why I don't put volume up there anymore, because it's just disappointing to see us trade so low in volume compared to what we used to do year after year of increased volume, historical volume. The only thing that's doing that now is the options derivative market, where you trade the binaries and so forth. That's where the volume increases every year, record volume, constantly increasing, because people are still getting comfortable with the option derivatives after, 24 and 23, 47 years. 47 years? Am I that old? Ugh. 47 years. Okay, yeah. Anyway, options have been traded now for 47 years on exchanges. And so, wow, now I really feel old this morning. And then, and so, God, it's going to be 50 years in 3 years. Ugh. So, that's the only thing that increases in volume. That's it. The rest of it is very diminished. Volatility is extreme because of lack of volume. We are old. Yes, we are. Yes, we are. Yes, we are. Oh, man, I hear you. Yes, we are. All right. Now, from there, let's see. What else we got going on here? Let me think. Okay, there's the cable. If you want to see any particular product, just put it up on the chat line. We'll put it up there. And then what we do is we have a habit of going through all these products just solely because got to do something, something consistent. So from there we go over to the Swiss. Let's see what the Swiss is up to this morning. And there's the Swiss right there. You can see it's been moving down. We'll put it up over here. There it is right there. It's gaining against the dollar. That's cool. It's doing the same thing as the euro. We're always happy when we see the euro and the Swiss move in the same direction. It means that things are a little bit back to normal. You can see here it's battling through the weekly sell number with no problem. Right there. You can see our fast algorithm broke underneath it and is still underneath it. In other words, it's telling us that this pop meant nothing. And the slow algorithm popped up and now it's moving back down again. Okay, so Jamir says, laugh out loud, you're trading 47 years and I have 45 years, but we're never old. Right on. You're right. No, traders die in front of their screens. That's what it is now. Yeah, we used to. There was this. Just to go back to that before I answer the next question. I'll put it up on the screen as I answer this thing here. There's the yen, so you can see our work in the yen. There was this when I was young, back in the '70s, in the '80s. I remember there was this old guy. Everybody would wear suits back in those days, or at least ties and shirts and things like that. But you could get away with wearing a trading jacket with a tie on. And so there was this old guy. He'd come in about 3 days a week, 4 days a week, and he'd stand in front of him. I'm trying to think which stock it was. Ben & Dickinson, the pharmaceutical instrument company. Abbott Labs. They were all right near each other. I'm trying to think who else. There was something else there, too. J.P. Morgan. And, he would stand in front of the old stocks. Not the new stocks, the old stocks. Music Corporation of America, MCA. He would stand in front of those stocks, all the way in the back of the crowd. So in other words, he was not interfering, and he would stand there. And then we felt so bad. He was so old. He was a clerk on the New York floor during the crash of 1929, and he still. I mean, he looked like was it Missoula, or was that one of these old Greek gods that was really old? I mean, he just looked like Father Time itself. But he would come in 3 days a week, maybe 4, and so after a while we felt bad, and we would in those days you couldn't have a stool to sit on, only on the trading desk could you have it inside the trading desk, but not out on the trading floors. And so we started putting a stool up against the wall in that spot, thinking that he would sit in the stool. And he wouldn't. He would stand. But after time, we told him that we put that stool there for you. And he might have been in his 80s at that point, or 90s. I don't know. They said he was a young kid. He was a runner on the floor during the crash of 29 at the New York. And we'd talk to him once in a while. But, yeah. Traders die with their boots on. That's what it comes down to. All right. There's the yen. Bless you, XD. I like that. There's the yen trend line, nice on a daily. Let's talk about the yen. Let's take a look at that. You see, it's playing around with the weekly sell. It doesn't look like there's going to be any problem at all. It's going to get into the weekly sell because it's touching the manifold down here at the bottom like that. So that's to start off with. We kind of think that if we get into that weekly sell, it's going to find its way back down to the 125 area. This is the 127 area right there. We were looking for it the last time it fell into a sell, and it didn't happen. It got down to the one. We went into the weekly sell in the 140s or something like that, and we thought, oh, it's going to see that 125. It got to 127, and now they've brought it back up to the high 130s, and I think they could bring it back down to the 25s. I think you might see that. So that's my opinion on that. Up and down. Yeah, really. Pronouncing my name is not Jarmor, but Jamara is not EJ, it's JA. Cool. Ja. Okay. Jamar. Let me see if I'm reading that right. It's not EJ, it's JA. Cool. Jamor, is that right? Like that? Let's see. Oh, and you said 1929, like statue, laugh out loud. But for you young ones, everyone above 18, dinosaurs. Nah, man, I was 20. At that point, I was in my 20s. And, I was like 24, 25 or something like that, So, he, I had some maturity to me, and boy, he looked old. And he was old. Did I say it right? Oh, okay, that's cool. That is very cool. Yeah, and so I communicate with traders today that are, in their 80s and 90s. They're still trading every day. JA, I like that. Thank you. Yeah, JA, I talk to traders, old traders, that are like. Matter of fact, one of them yesterday sent me something. What did they say? I got to tell you this. This guy's like 85 years old, right? And he's been, a chairman of an exchange, the whole bit. Just been around a long time. Let's see if I can find it. He was complaining about the way Bloomberg on Bloomberg TV was portraying what the Fed chairman said, and he said, now he's like 85 years old, and I know his daughter's never had grandchildren, so I don't know where it came from. Maybe it was like nieces and nephews. But he says, I'd be better off watching SpongeBob and SquarePants. I thought, I don't think that ever played in your house, because your daughter's never. They got married, but they got married when they're later years, and they didn't have grandchildren. He doesn't have any grandchildren, and I'm thinking to myself, where did he come up with that one? SpongeBob and SquarePants. Yeah, so what a hoot. And the yen, JPY, please, yes. And so there's the JPY. That's how we feel about that. AA says, Ambrose says, me too at 73. Yeah, I hear you. That means you've lived long enough to know that some of the things they're saying nowadays is literally crazy. I think it was the governor of Arkansas. The new governor of Arkansas said it. She said that Sarah Huckabee Sanders. She said that the times have come now where it's a difference between real and crazy, and that's what she was saying about the political spectrum. It's like not one opinion versus another opinion. It's more like what's real and what's crazy. One side is crazy, the other side is real. It's gotten that way. And when the Fed chairman, when a reporter asked him, could fiscal responsibility from the government itself help fight inflation, he says, I don't pay attention to that. Whatever they do, and I just do my job. And I was like, oh my God. That's about as dumb an answer as you can give. And I can tell you, the stock market was trading the S&Ps were trading at 4,045, 46, something like that. He said that they dropped down to 3,966 over that 20-minute period or 30-minute period. Me too. Yeah, I have the charts still. I have the big charts papers. It's like 3 feet, long and so forth, height-wise, and they go on for hundreds and hundreds of feet. I used to hand draw the Dow every tick, then call my broker to please the place to trade. I used to do stochastics by hand. I used to chart the Dow on a half-hourly basis, and I would do stochastic, the slow, fast stochastic by hand, doing hand count, doing the math, and then putting it on the chart. Dropping S&P with don't care words. What a powerful man! I know. It's insane, and that's why we're stuck with the inflation. I think they're going to raise a couple more quarter points. I think that's how it's going to play out too. Let's see, who should we get up on let me get the Turkish lira up on the screen next. I think that I think they may raise a quarter point the next time again. And then depending on how the banking system is, they'll do something else there, I think that's how it's going to play out in the end. I do. I really do. So that's confusing. Okay. So, what else can I say about any of that? I guess what it comes down to is what else? I guess you can see the Turkish lira. It looks like the foreign aid coming in has dried up and starting to go to trying to get to all-time highs again. Copper? Sure, let's dig up the copper. Yeah, the Fed chairman is he's off the rails. He's not making any sense at all. He's not an economist, so I'm not sure how to view him more than anything else. There's copper. It's been inching up. We went into the daily buy. The weekly is still down. You can see it there. It just doesn't want to. You can see the fast is moving above the zero line. You can see it right there. It is actually a plus at the moment. The slow is still moving, but it's not through the manifold. If it gets through the manifold and the fast is through it, there's a good, that's a good 85% chance of strength on the upside. And when they're both together, it's more like a 99% chance of strength on the upside, like this one right there, where they both get through together and you get that strength out of it. What else can we say about copper? I kind of always say that copper, to me, and I'm going to put it up on J4X, but to me, copper is more like looking at China. China's industrialization, and they use copper like gold over there. So let's see, where's that at? It's on here. There's copper right there. So that it may, I saw all the currencies, not the currencies. I saw the Pacific nations, all the Asian, I guess you call them Asian or so forth in that region. Pretty much most of them were relatively firm, especially China. Hang Seng and so forth were all firm. They were up. So you're seeing a little strength there, where they tried to take it down this morning. You can see that right there like that. It made a new low, took out yesterday's low, and now it's taking out today's high at the same yesterday's high. So you get an outside day developing here. So you get some strength trying, just like where this day you saw they trapped inside, the high was lower and the low was higher. And then the next day we got some type of wild action. I forget what that might have been, the SVB problem or something like that. And a lot of times inside outside days can be very indicative of what's going to happen a day or two ahead of time. Money kind of runs that way. So what else can we say about copper? I guess that's about the best. I've been impressed. Let's see. Let's put it up on here. Let's turn on the Hinky. You can see that strength there. You can see it's towards the top end of the range. The weekly, let's put the weekly up on J4X. It's trying to turn. You can see that there, but there's a lot of red, just like R minus right here, So that's our weekly down at the bottom. So it's, I want to say that when I look at copper and I see this downwardly action, it says to me that things are not really growing as well in China the way they want it to go. That type of thing. That's kind of like the, I guess the best way to describe it in the end. I hope that makes sense about the copper. I don't think we're going to see $5 copper anytime soon. And do I think we're going to see like 330 again? Not for a while, probably. I think it's going to be trapped in this range for a while until they can figure out what they're doing. Can you use your system for day trading? Oh, sure. We have somebody from, Kenya that likes watching the 1 minute and 15 minute Canadian. Let me show you that real quick, and then I'll show you my S&Ps. I'm playing around with a couple other indicators this morning to get a flavor of it. So this is a sell. This is the S&P. I use spatial bars. I don't do minutes. I do spatial. So this is a 786 tick or contract bar. And what that means is that it has to tick 780 or do 786 contracts, and it makes another bar. This is the sell right there. This is ticking away live as we speak. We'll give it to you. And I've been looking at, matter of fact, I've been playing around with some other indicators to see if I can get some type of reconfirmation of some stuff through volume, no less. I'm actually looking at volume this morning. Don't ask me why. Out of nowhere, my head said, go look at volume again. You haven't looked at volume in a couple years. And so we went into the sell right here. That one, or I guess the close of this bar right here. And you can see, until what happens, this is a buy right there. When both the green line and the histogram and the cyan or blue one goes above the zero line right there, that's the buy. And then when it goes below that, that's a sell. And I use this to trade my options and the futures contracts and so forth. And so you can see here, it failed. So it's been in the sell since right here. It almost got there. You had the green line above. Let me widen this out for you. You see the green line got to the plus side, but the blue line, blue histogram stayed underneath which kept it in a sell, which also gave us a volatility signal of a green and a red. And then the next thing you know is we're still sliding down again for a second leg. And I was looking at this volume ratio thing this morning, and notice it broke here and aligned with my math. And so I thought that was kind of interesting. And I saw it here. It broke above, and my math. So I was looking at the volume ratio to see if I could get it to confirm. In other words, get rid of things like this. Like you see where this one gets above, this one tries to get into the buy, and it does, and that's in a buy. But this is still not through the zero line here. And I thought maybe I could use that to, help me trade my options. So I trade the options and binaries and future contracts all against each other. So that's the intraday of it right there. And I noticed every time there's two of these, this is a volume average. Every time it confirms the buy even more. And I was just playing around with volume this morning. Just thought I'd look at it, see how it acts. It's doing a pretty good job, actually, trying to combine together volume with my math, which is something I haven't done much over almost a decade, really. But for some reason this morning, and for the other people out here who I show my intraday work, when they ask about it, can contest that I never have volume up on it. I never even look at volume. But today, for some reason, I had that desire to go look at volume. I don't know. Just for some reason, out of clear blue in my head, just said, go look at volume. So thank you for asking. What a good question. All right. And I explained earlier in the webinar why I'm kind of unhappy about volume, and that's because of how bad things got beat up, over the years. Ever since 2008, it's gotten really ugly. So that's part of the rationale in my head. All right, now can you show NQ? Most definitely. Here, I'll make a copy of this. This is an open workspace. Oh no, make a copy, and then paste. We'll make it the whole page for you. No, I love questions. Be my guest. And let's put it in there. What was that? NQs. So, NQ. Right there. This should be interesting. I haven't looked at the... I used to trade NQs. I kind of drifted away from them solely because kind of more of an S&P guy. The NQs are interesting. They're very volatile, and there's a lot of action in them, so I can't complain about that. But I like the rhythm of the other. And you can see here it went into the sell right there, and then it tried to go up and still failed and kept on going down. Now it's trying to get back into the buy, and this was definitely confirming to us. Now that gave us a second one of those on the volume, but it was in a sell, so it doesn't matter. And then it just went back into the red, and it's rolling over. And you can see it's through this line right here too. It topped out with that line. This is the volume ratio I've been playing around with, and it's becoming a very interesting indicator. Sometimes it really jumps ahead nicely. Sometimes it's behind. Like here, it pushed it underneath, and we went into the sell at the same time. And then I went right back into a buy right there on that one, and it jumped across the line. Wow, look at this. They're trying to lift it now. Look at that volume is starting to really roll in. Remember, we got about, where are we at? We're 19 minutes away from the U.S. stocks opening up on trading floors. So that's really pushing. Same day, yeah, it's an intraday trade. This is just this is live 786. Do you want to see a daily chart, you mean? We can go look at the daily chart. Daily chart, we're in a week. Yeah, here, I'll show you. Where are we at here? We're in a weekly buy for like second or third week now in NQs. Our system's been very bull. See, here's the S&P 500 on a daily. We're still in that weekly sell now for like 3 weeks. Okay, and the fast algorithm has been in there a sell for 5 weeks. The same thing with the where is it at? There's the Dow Jones Industrial Average. That's been in a weekly sell for 5 weeks. But the NQs, let me put them up for you now. The NQs are in a buy now for basically 2 full weeks. And it started getting through in here, and it's still in a buy, and it's looking very, very good. And I explained this yesterday too. Someone asked about the NQs, I think, or we talked about it. I used it as an example. The thing with the NQs is that the NQs are very interest rate sensitive, whereas the Dow Jones Industrial Average and the S&Ps are much more sensitive to basic economics. But the NQs are very interest sensitive. They borrow lots of money. It takes a lot of capital to run them, and so they make the money, but they're very, they're just very expensive to run. So they have to borrow more capital to keep up, and they pay their bills well and so forth. And that's what happened. So yesterday they sold this down. It almost got into the sell yesterday. Look at that. It stopped by the hair of its chinny chin, 1.50. And then it it's still showing us we're in the buy now, still since back last week, and so since Tuesday of last week we've been in the buy, and then we can go back to that intraday ratio again. Where is it at? Let's go back to the intraday again. Right there. See, it's in the buy right here. And we got all this, and we got this thing jumping through. That line jumped. I don't have a strong opinion yet, but I'm very impressed with the volume ratio on an intraday basis. And you can see there, it's still climbing up. And it looks like it's trying to go after, is that the highs of the day? What's today's highs? The high is 855. And that right there is 845. So that 55 happened in the Asian hours. Let's see if we can tighten it up and see that a little bit. Yeah. No, it was the European hours. So in the European hours, they tightened it up, and they, from the Asian hours, they brought it up from the Asian hours, and then Europe opened up Europe opens up like right here. So they did the buying, and then for some reason they started selling them down. And then they bottomed them out here. This is where the U.S. fund managers start to get involved, right here, hedge funds and so forth. And they started buying it again. The U.S. is buying it, and it's doing it again. And it looks like they'll probably make. I'm sure that I don't know. I can't use the word sure, but I would speculate very aggressively, believing that they may take out these highs again and this high right here. So that's what it's doing right now. It's playing with these highs. And we wouldn't be surprised because of this strength here that they're kicking this up. Matter of fact, with all those 4 bars in cyan at this point, it's definitely very bullish. Very, very, very bullish. And so I think they're going to pop it. So it's at 28.75, and we are 15 minutes from the open, and they're trying to push on it. Oh, no. What did it do? Fall off? Let me reconnect it. Right there. There we go. Let's see, right there. Yeah, I think they're going to take out this high. They're trying to take out these highs here. And this failed to take out the 55 and went to 45. And I kind of think it wants to try to break out of there. And, the fact that they, some of the talking heads or, some of the news services are saying that they're going to pause. And some of the news services are saying maybe another quarter or two over the next 3 months. So either way, that puts energy into the NQs. And we showed, I guess it was yesterday, we showed this too at the same time. I know it's backing off a little bit there, but I think we showed that the NQs are very close to the yearly high. They're not that far off. Whereas the Dow Jones Industrial Average is below the yearly lows. It made new yearly lows from these moves, I think, and the S&Ps are about unchanged. I think that's how it is for the year. So if you're trading on this, then I would say that this looks like it's trying to do it. Now there's a bad sign. This is something I just noticed. See how the line is breaking underneath here in that volume ratio? And we're generating a red histogram right there. It's got 502 ticks. And we're still above the zero line here, so we'll see what they do how this closes out, and if this line finds the way to climb back up again. That would be much more bullish. And so far, we'll see the test of it right now. It looks like they're trying to do that. They're trying to push it down, and they're failing at it. The buyers are coming in. I think I would refer to this. We used to say on the trading floor, we refer to this as it's trading heavy. At the moment, it was trading heavy, and it seems to be slowing down on that. When we say something trades heavy, it means it's a lot more. It seems like it's getting pushed down more than it's getting pushed up. And then if it's trading, and then if it stops trading heavy, then more than likely they're going to start to take it back up more again. So you got 397 ticks. It's very quiet because I can stick around for a few minutes after the market opens up. We can bring do a couple more minutes, and you can see how the action will be. If this will help you out, you can see that it's right now the markets are relatively slow. They're really not. Let's put it this way: I don't see a lot of conviction in the trading right now. Now it's inching its way up, which it should do because we're in that buy. Now we'll see how this line turns. Whereas this didn't go below the zero line. It just dropped down towards the zero line. And this is red. So these two are giving you like, oh, it wants to go down. Now let's see how they close. It's 240, 228, 223, 221. See, it's very thin trading. 187. It's like, it's very thin trading right now. And I think it wants to go up and challenge this high here. That's where my head's at. That's what the math is trying to tell me. So that was a little test by the longs taking profits. And now the question is, now they're making new highs here because the last high was 32.75, and now the high is 33. So they've just taken it out by a quarter. Now this volume ratio thing that I'm just exploring with, oh, look at that. Oh, the histogram just turned blue for a second. There it is again now, blue. So it's trying. They are fighting to get this thing to go. They really are fighting to get this thing to go. So I see it more pushing, not trading as heavy. And here comes a new bar. There you go. And it stayed in the blue. And the line on the ratio at the very, very bottom is trying to pop up at the same time. So we can do this. We can make a copy of this for you. Let's see, copy. And I guess what we can do is we can disconnect it like so. And we can move it over like that. And then I can go back to looking at other things at the same time. And you can see your product that you're watching through our eyes, through our mathematics. What is that? That's it right there, right? No, I got the wrong thing. So let's go like this. That goes like that. Is this the NQs? No, that's not the NQs. Let's minimize that. Now let's fix that again. Like so. Nope, that didn't do it either. All right, here we go. Okay, now we got it. We do this for somebody else too. There we go. And now what we're going to do is we're going to go like this. We're going to shrink this down like that. There we go. And move that over like so. And you can watch that while we go through the other products. Where would we leave off? I think we left off at the Turkish lira, so we're going to go take a look at Canadian. But if you want to ask about something else, be my guest. Or ask about it, you can ask again. I don't, I just answer it. Whoever asks the question, I answer it. I stop what I'm doing and I go right to it. Now here is the Canadian. Let's take a look at the Canadian right there. And you can see it's breaking down a little bit. And when the Canadian is breaking down, more than likely, oil is going up. So let's take a quick look at oil. We'll put it up on, see there, breaking down there. We are, where is it? We're in the weekly buy too, right there, as you can see, for, was that 6 weeks. Now let's go over to J4X and take a peek at oil and Brent. We can look at both of them. There's Lake Texas, and you can see it's going down. That's interesting. Oh, that's a weekly. Okay, let's get it into the daily. There you go. It's going up. That would make sense. When the Canadian is heading down, normally about 75-80% of the time you're going to see oil moving up and vice versa. It seems to be a good indicator in confirming what's going on with the energy sector. Oh, they're making new highs again on that NQs, I see. Let's move that out of the way like that. So keeps on trying to push up. And then from there, we go over to the South African Rand. Right there. And when the South African Rand is gaining against the dollar like this, normally that means gold is going up. So let's take a look at gold on J4X. Where are we at? Gold. Right there. There it is. There's gold. Just looks like it might be plus. Yes, it looks like it's plus. Let's go check it out over here. Let's see. And we'll move this in so you can see it when I look at it on that stuff. Oop. Okay, so let's do this then. We'll move this over like so. Like that. There we are. And I'll move that over like so. There we are. We'll get this thing set up so you can see it better. Let's see. I want you to be able to at least see the tick. So I go like that. And then I move this over like so. There we are. Whoa, I didn't mean to do that. There we are. So now when I click on this, you can see there's the gold moving like that. You can see that. Now let's put gold up over here. Let's see, what were we looking at? That was that. So we go like this. And let's check. There's the south. There's gold right there. Gold is lifting up. Yeah. Because the South African Rand is moving down. And that's usually like a confirmation. Take a look at J4X PVT indicator. All right. Let's see. PVT. Let's see. I might have to make it bigger. Where's the indicators? There we are. It has to be wider. Okay. Right there. Add an indicator. PVT. Can you give me a hint? Is it in the P's? Pattern recognition? Price transformation? Quick filter. PVT. PVT. Enter. Price volume trend. Okay. Yeah, you got to tell me how to do it. How do you want me to customize it or add? I just go like add. No indicator is selected. Okay. Price right there. Okay. Add. There we go. Okay, it's the cloud. Neat. I like that. That's fun sometimes. Like that. There we are. So the cloud is trying to lift up. And when it went into the cell here, it was red. Let's just do this. So it was red. This is our sell signal here. And then our buy signal there. and it breaks into the sell again, and it goes back into the buy, sell, and when we combine the hinky ASCII, there's your sell, and you allow it to go, there's your first buy right there, and it goes right back into neutral, and then when this breaks here, there's your sell again, and then there's your buy when these two line up together. So this is kind of a little bit spread out more. This indicator and that indicator is faster than this PTV. Yeah, I guess it can be incorporated on some level. I would say price ratio. I'm just enjoying looking at the way the price ratio is going. Volume ratio. I'm sorry, right? Not price to volume, but just the volume ratio itself. And that seems to be very indicating. And you can see here we've gotten to 41, 42. The math here is telling you to still be long from this point. Here is confirming it because it only gave us one red. If it had given us two reds, I'd be concerned. Now here the volume ratio itself has dipped underneath the zero line and back up again. So it's not doing too good a job about giving us a direction. Just a generality there. How's that help? Does that help out at all? Price volume? I would say go look at price volume ratio. I like this cloud thing. I think the cloud, this pattern and all looks neat. But I can say pretty comfortably, you can see, we go into a sell here, it goes into a sell there, and that's fine. We start to show strength, and I guess if we turn off the hinkies, you get a better feel for it, but then it goes back into the sell again. It's still in a sell throughout this whole thing, and our math tells you to be long here, and this doesn't tell you to be long until here. So I think that's I think our the slow and fast stochastic with the hinky ASCII bars is much more efficient than this this volume situation, the PVT. Does that make any sense to you? We try to use live constantly to show you. Oh, what did we see there? Oh, that's the South African rand still breaking down. Now there's 49. And we have not had two red histograms here at all since we went into the buy, and it looks like it's going to take out the high that we talked about. How much minutes left? Oh, okay, we got 1 minute left. Yeah, I've been playing around with volume too. Just like I said, just in the last 12 hours. Not even. It's like 8 hours. Here we go. Now they just made new highs in this right there. There's new highs. And that's what we were saying back here. We're expecting to see these highs taken out. And they've taken them out now. And you can see the speed of this now. There goes a new bar. Here comes a new. It's like every 5 seconds you're going to have a new bar. Or maybe 4 seconds. No, I guess it's like 8 seconds. There's a new bar again. Again, in other words, it's got a lot of action to it. So that's the way I do my research. I use live and figure out who is making money and who's not. I can say this: look at fast and slow stochastic competing against each other. It's the best public indicator you're going to find out there. Look at that. Made another new high. It's making new highs going all the way up. Just exited. Nice profit. Very good. Very, very good. That's the idea here. Make money, not trade. Make money. That's the key. That is the key. All right, traders, I'm out of here. I'm going to get back into the game also, strapping my helmet on. So this is Doc from North America. Catch you all tomorrow, same time, same channel. So, happy trails to you until we meet again, which will be TGIF. Thank goodness it'll be the end of the week, Friday. Happy trails to you. To all our trading friends, thank you, traders, and thank you, AA, for being involved. I love it. Please come back. Arrivederci, all. If I can find my right mouse. There we go. Oh, we got to come up with a title for this webinar too.